Apple is scheduled to report its quarterly financial results after the markets close on Thursday, May 1st, 2025. That has investors curious if they should buy Apple stock before the company announces its earnings results. I'll answer that question in this video. I'll also preview what investors should look out for from Apple when it reports its quarterly results, and I'll share with you my proprietary discounted cash flow valuation for Apple to show you what I calculated as a fair value per share for Apple's business. Of course, I'll discuss the recent tariff announcements and how that will impact Apple, and if Apple has any mitigation strategies it can deploy to offset some of these tariff impacts.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in its most recent report for the quarter which ended December 28th, 2024, Apple reported total net sales of $124 billion, which was up from $119 billion. But the segment I'm going to focus on in this preview is the product segment, because that's the segment that's going to be most impacted by the recent tariff announcements. And so out of the $124 billion in revenue, almost $98 billion was products revenue, the physical things that Apple sells, including iPhones and iPads, etc. And $26 billion was services revenue, which are not going to be impacted by tariffs, but the $98 billion in product revenue will be. Its cost of sales for products revenue was $59.4 billion. Undoubtedly, this will increase as a result of the tariffs. Now, recent estimates suggest that Apple manufactures roughly 25% of its products in India now, and the other vast majority it manufactures in China. So if we are to estimate that roughly 75% of Apple's manufacturing occurs in China, those products will face steep tariffs if they are to be imported to the United States. Thankfully, Apple has an international business and it doesn't have to send those manufactured products from China to the United States. What it can do instead is bring in those products it manufactures in India to the United States, because India faces a much smaller tariff of just 10%, as the reciprocal tariffs on India have been paused. So Apple can, at first, increase the amount of manufacturing it does in India. I don't know just how much leeway it has. Certainly, it can't make it so that it manufactures 75% of its products in India overnight, right? It can't go from 25% to 75%. But I think it can go from 25% to 30 or 35% manufactured in India, and those products it can import to the United States. And the products that it manufactures in China, it can deploy around the world outside of the United States, where it doesn't have to pay those tariffs. So as you can see here, in its latest quarter, it generated $124 billion in sales, and $52 billion of that came from the Americas segment, which includes Canada and Mexico. So if we are to assume that this breakdown of geographic revenue will remain constant for Apple, then we can say those products that it manufactures in India, will it be enough to serve all of the segment sales in the United States? And it might be close, right? If you do, the $52 billion divided by $124 billion, it's less than 50% of its revenue, let's say 40%. And of that $52 billion in total net sales, let's say only 80% of that was products revenue and 20% was services revenue. So we get to a number of about 30, 35, maybe $40 billion in sales to the United States, which might be enough where it can only get the products to the United States from India. Of course, there's going to be some products where it doesn't have any manufacturing in India. We were estimating 25% of its overall manufacturing happens in India. But that's not broken down equally among its products, right? iPhone, Mac, iPad, and wearables. It might have some products where it can only manufacture them in China, where it doesn't have any backup in any other part of the world. And so those products will have to face those tariffs, and Apple will have to find some strategy, either raising prices to offset the impact, working with suppliers to absorb some of the impact, and raising prices might also decrease unit sales. And so the number of sales demand for those products will likely decrease if Apple does indeed raise prices to completely offset the tariffs, because the tariffs are over 140%. So some of its product prices will more than double, which would make that product probably not viable in the United States, because competitor products are likely to have greater demand at those price points. So Apple's business is right at the epicenter of these tariffs. The risks to Apple's business are extremely high as a result of these tariffs. As I mentioned, it does have some strategies it can deploy to offset the impacts of the tariffs, but not completely and not for every product category. So it's going to be unavoidable for Apple. It must pay these tariffs in order to import these products to the US. The next step becomes, what does Apple do in response? Does it absorb those costs? Does it absorb some of it? Does it increase prices on consumers? Does it work with suppliers? How does it mitigate all of that? And it's probably going to be a mix of all of the above that I mentioned earlier. So now let's look at valuation. And coming into 2025, remember I told investors that Apple stock was not a buy. Apple and Tesla were the only two stocks of the Mag 7 that I did not have rated as a buy coming into 2025. And I've kept that hold rating all year long for Apple. And Tesla actually came into the year, I had rated Tesla a sell for 2025 coming into the year. Hopefully you listen to those recommendations and you haven't lost too much money on these stocks. But what about today? What about ahead of these earnings? Is Apple stock a buy now? Well, the fair value I calculated for Apple's business is $175 per share. The current market price is $197 per share. So given that I already thought Apple's business was overvalued coming into the year, and that Apple faces the greatest risks it's faced in a very long time, I don't see any reason why investors should buy Apple stock ahead of earnings. At the very least, I would wait until after the earnings release, absorb that information, listen to what management says about its strategies to mitigate these risks. How much manufacturing capacity does it have outside of China? And does it have manufacturing capacity for all its product lineup, or is there certain products that cannot be manufactured outside of China? What is Apple's strategy to mitigate those higher tariffs? Is it going to pass along higher prices to customers? Has it already started to do so? What's the customer response it's seeing? There's a lot of questions that I would want to hear Apple's management team answer before I take a big risk in buying Apple shares. So I would say, to answer the question, should you buy Apple stock before it announces earnings? I would say no, I would not do that.
Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.